We have been raising our allocation to bonds. We're underweight, as you might remember, over the last few years, we've been talking about it, generally modestly underweight bonds, particularly on the long end of the curve. We've been bringing that back closer to benchmark. And I'd say that is more of a reflection of the economic environment than trying to make a bet on policy. Now, if you do have an environment where growth is going to be slower, it's not crazy that your bond allocation is going to be closer to home. But by the way, we've done a similar thing in equities. We brought our equity allocation down closer to benchmark. So what's happened, generally lowering the risk in the portfolio in this type of environment, rather than a strong bet on you want to be in bonds and equities, you want to bring risk down.
Maybe the larger question is U.S. assets versus ex-U.S. assets at a time where the source of volatility is the United States, and this has to do with bonds, but more broadly with dollar-denominated assets. Does it make you rethink some of what you have in your portfolio based on where the source of volatility has been coming from?
This is a great question. I think this is actually a harder question to answer, but what I would say is I don't think you'll have a knee-jerk reaction to move away from dollar assets. Couple of points. First of all, we might remember 2011 during the debt ceiling crisis. The U.S. gets downgraded, the epicenter of the crisis. What happens? Treasury bonds go up. The dollar is still the reserve currency. We can debate what's going to happen in 5 or 10 years. It is still a safe haven asset. And I do think that you've got to be skeptical about calling the end of dollar dominance. The other point on the equity side, we are still modestly overweight the U.S. Now, why would you do that with all the turbulence going on? Simple answer, we still find better companies in the U.S. We think about what do we want in this environment? We want profitability. We want companies that can generate consistent earnings. Still find more of those companies in the U.S. rather than Europe or Japan. So to my mind, even with the turbulence, from a bottom-up perspective, still an argument to be modestly overweight the U.S.